Boom, 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 and boom. Okay, what's going on, guys? So we're gonna be going over the trades for what's today, the 1st of October. So we just had our quarterly rebalancing, which was our end of month monthly candle closures on Friday, or I'm sorry, I'm so tired. Yesterday. So I was getting OPEX and all that kind of stuff all mixed up this whole entire month. But we're past those, right? We're past those ranges where those times where trading isn't necessarily so vulnerable. There's not a lot of vulnerable opportunity. And then we get into a time where things get a lot more clear. And yeah, I want to get into these charts because there was a headline today actually that affected the market and its intraday type of rotation into short-term defense to kind of get the sector rolling on energy as well as industrials. So you go over to XLI, and XLI is the industrial sector fund. There wasn't the craziest day over here, basically a flat day. This has been trending its way higher because of a few names, though, and there's few names that are sensitive to a war headline, if that makes sense, would be RTX. So you go over to RTX, boom, we had a really nice break and a nice continuation day. As you guys can see, when you pull up the EMAs, it was kind of just a little push back into the EMAs, a hold, and then we got a break. Oh, jeez. We got a break out of this 1, 2, 3, 4-day compression range, which was really, really, really nice. So this was a really nice trade. I feel like any sort of risk here could have been like these equal highs that we're sitting up here on the past 2 trading sessions. And then you go into your 15 and you could take a look how that was a really nice 15-minute print to start off the day, where things reversed and they gave a fake out to the downside, and then they immediately found a buyer, really low volume off the open, followed by increasing harmonic volume patterns for the upside. That led this to a really nice trade. That was just like basically what the market was about today. Here, I'll show you guys. I mean, this isn't the actual headline, but the U.S. Has indicators that Iran is preparing to imminently launch a ballistic missile attack against Israel, senior White House official tells Axios. So yeah, this was a very impactful type of headline. And then whenever you're looking at like your sectors, go over to your sectors and then start flipping through what you would find to be like the defensives. And around war times, that is typically going to be like your energy. Energy has been a big underperformer with really clean risk levels here. And I actually already had this one on watch because it was a little mini, basically inverse head and shoulders model that was setting up over here. And it's not even necessarily the fact that this is such a big inverse head and shoulders. It's the fact that it's just off of a previous range of daily support that broke, found the failure on the breakdown beneath, it ripped its way back higher, and then we started to get the pullback subsequently for then a higher low off of the initial preliminary support that was established in this in this accumulation model that leads to a inverse head and shoulders type of look where, okay, you have a level here, right, and then you have obviously a lot of consolidation off of it, and then you have a little spring, then you trend your way higher, then you finally make your way back down, and then you put in a lower high, you break, and then you push back higher, attempt another lower high over here, and then you put in a higher low. Now you're looking at potential continuation as to where this could potentially break the structure of that higher low attempt. And then obviously continue into where there can be higher lows higher up, right? So like something that is all the way up here can be a target. This has already been claimed, right? And then you can start looking at like just an intraday trade, right? From somewhere within here, confirming that this little swing low down here, which would be this one right here, is your daily higher low. And then obviously that whole entire headline that we saw throughout the morning was basically just the driving confirmation that led me to believe that this is going to be a really nice trade for the day. So let's go over to CVX. And this was a really, really, really nice trade because, like I said, it was already a planned trade. Sorry about that. Bad hiccups. Okay, so I just searched up CVX. As you guys can see, I am long CVX, October 18th and 11th expiry, by the way. That was at 9:42 this morning. You take a look over here at 9. This was the 29th, right? So this was actually the day before. This was 2 days before the rebalancing, right? Or one, I mean, not 2 days, but it was on Friday no, I'm sorry. I am so tired. This is on Sunday that I posted this. This was for the weekly scan. Sorry about that, guys. And we had this big gap from over here, and this was the earnings gap, okay? This was the earnings gap that also kind of tied alongside this spot right over here. And then I said in that post, as you guys saw, I am looking for this to like find its progressive spot to then be claimed. This general range is a area of a higher low. And then if you go into like your hourly time frame, take off the extended hours and just take a look at this. It was a gap down followed by a really nice move right off of the open. There was a war headline here. This was also kind of just creeping its way back higher into where, like I said, if you take off the extended hours, you could see how this was a very important like gap progression area on the chart itself that actually extended, if you're looking at the more recent gap ranges, all the way up into here. And this is a lower high attempt all the way up here that was on the daily chart. And then we have a swing high that's sitting up here, as well as a little mini gap, as well as a potential retest that could happen up into this like 152 40 spot. I could start thinking about rolling profits. I still have some runners here, although I did aggressively take profits on these just because we're getting past the quarterly rebalancing. We don't have the strong flows of the derivative market that are bringing a lot of volatility to the name. Obviously, this headline was a very vulnerable headline to be trading just because the energy sector has been showing off some really nice charts, right? So I was looking at yesterday's close, just the typical risk that I typically take. Yesterday's close to like yesterday's high range to be somewhere where I would be looking for a risk on. 942 is the execution. It was basically at like 940. Okay, so I caught a nice little pullback here. I never got my bid fill, unfortunately. If you go into the extended hours, you guys can see how this was actually like our little high before we held the gap and then pushed our way higher. This was actually right off the open, just a small little sweep of the pre-market low, as well as a push and a small sweep of like this support into that strong closure yesterday. And this was also, like I said, a really nice strong closure. And then we opened flat, right? This was your yesterday close. This was a flat open, and then we found a really nice move right off the rip, and for just a small little breakout trade to then target into like up into here 150. Okay, so if you're looking at simple risk to reward calculator, you're taking a risk here, maybe beneath either the previous session high, the previous session close. You're looking at like basically, I would say, a 30-40 cent risk with a target all the way extending itself up into like $2.75 of reward there. This is a 6R trade, and this ran like 85% with October 18th expiration. I expect this one to see a little bit more continuation as we move our way higher. But this was just a really, really, really nice trade. If you go over, take a look at like the rest of the energy sector. Another thing that I really like to emphasize is just like rotations and finding where smart money is kind of rotating its way towards. I think Apple was distribution, and we actually had big liquidation that was on Friday with Apple. Warren Buffett has a big position within Apple and has a big position within Oxy, and he keeps building and averaging down in. Well, I don't know if it's technically averaging down with where his average is, but he's buying more and more Oxy, okay? And if you go to the daily chart, I mean, this is in a very, very good spot. I don't know if you guys listened to my scan at all. Do you guys remember what I said? Where is the draw to? It's to the high volume candle. This is why it's so important to join my weekly scans, because I talk about how if this range up here isn't liquid enough and then we start to find the failure, where are we going to move to next? Well, we're going to move to the imbalanced candles that have record high or close to record high weekly volume off of, right? And this is a huge volume shelf. You don't even need the volume shelves, guys, because we know all the volume is sitting within the name from right over here, right? This is 4 weeks of consecutive strong volume. Call it 3 if you'd like, and they're all trading underneath this wick. And then we start holding right beneath that wick and into this imbalanced candle very well, okay? So this had a relatively decent Friday. Lot of volume, and the volume was elevated from Thursday into Monday of this week. Okay, so this is grasping a lot of liquidity off of this area. And if you go into like your 15 or like your hourly, you could take a look at like the smaller time frame levels. This is obviously the failure level that we have in play, which was from right over here. And then we got the gap up, followed by the really nice strong close the next following day. And then after that, what happened was this pushed up into swing low, swing high, golden pocket, started to reject, and then found a higher low on the hourly. And then this was all basically something that shook a lot of people out, and then just held the gap like a champ, right? Like, I mean, this just held this area like a champ and then found a nice closure. If you go into the daily chart, that's a decent looking Monday candle. Volume is rising once again. It's in a big support. Now, it doesn't look like a big support on the chart, but if you understand that concept, then you would understand this. So that was really nice. Zom was decent. We have this unfilled bear gap up here that we've had for a very long time on Zom. If you want to take a look at your EMAs, go ahead and do so. Simple undercut and then a reclaim right into them. Yeah, I mean, there ain't really much more to talk about other than the swing low being a very important area. It was a simple sweep and a hold, followed by a higher low on the gap down, and then a push higher. Really not much to these charts, guys. This chart was a little bit more unclear to me than CVX was. That's why I took CVX. You could also see how the EMAs were curling and being claimed right on today's trading session low as well, which I do know intraday, right? I always kind of have things mapped out in the back of my head whenever I'm looking at these things. So that's really clean. I mean, you have this name. What's this one? Marathon Petroleum also filling a gap and then building out like a consolidation. You have a lot of these like bigger weekly channels over here in energy. If you go to the weekly, not that one, but like this one's pretty big. Valero's is huge. Steep decline on Valero that I don't really like anymore. However, it's just testing into a very big range of weekly consolidation. The cleanest chart in here, though, guys, was pretty much this one, given the fact that the spreads are very manageable. Or Oxy, in my opinion. This or Oxy. Zom, I couldn't find a really clean risk. You could also simply long the sector funder itself. Really nice premiums over here. I mean, you had simple breakout retest entries right over here, and then you can establish the risk off of the reclaim of the overnight gap. So that was a really nice one. Let's go into the next. I actually realized a little bit of profit on these because it was a really nice add into my position, and I took a little bit more leverage with smaller expiration on the NFLX. I still hold my further out expiration. I am short on this one. If anybody didn't know, I talked about it like 700 times. We're not getting a crack in structure. However, these are higher time frame, 4 hour and daily higher lows that are now kind of being tested into. we're holding them, but we got a lot of price target upgrades. So when you take a look at the price target upgrades that came out this morning, 11 hours ago, 800 from 790, not really relevant at all. And we got a nice gap up. The gap up, guys, what was it into? Pull fibs, high, low, for just a gauge of risk and where it can be at. The draw is always to those capitulating candles. And this was a really nice hourly print that failed hourly levels. Very clean. $3 trade. Go take a look at the Discord. Right there. 9:39 in the morning. I was executing right off the opening print. Right there. Does it have the cleanest look? No, but is this a really nice, heavier volume 5-minute candle with a shooting star? Yes. And is it off the 618 in a higher time frame, lower high on like the hourly perspective? Yes. Are we getting a change of character in the chart? Yes, on the hourly. This is technically also the hourly wick that is failing, which I also really like to look at. And then these are your previous 2 trading session highs that are relatively in the same area. And we got the slippage beneath that into the retest for then another lower high. This is your previous day high. So as you guys can see, we also had a rejection right into that, into the close, which I do like to see as well. So we'll see how this one plays out. I was also short JPM. I had some runners on this one. It got a really nice strong close. I was decently red on this with just runners. Didn't even really mean to swing these, but this was initially a short focus. So if we go to JPM on the daily chart, it's a nice looking trade. Right here, JPM short side focus. This had a nice capitulation candle into the footprint bar on September 10th. Ever since then, yeah. So this was a short focus, and then we got a disgusting gap down actually. Right into the target, and then it had a nice rally afterwards. But this is all an hourly potential shift in structure for then a breakdown and then a retest lower. I would like to see the bottom of this gap being filled. And this was just a really nice short right off the open. This one ran like 30-40% with a little bit of time. Simple risk right off the opening print on the open. Bled down into the gap. This is the gap technically. Level to level trade. Not anything too crazy there. If you take a look at like a short position here, maybe risking the wick with like execution here, target into here. I mean, it's like a 2.5 R, nothing too crazy. Got to be taking profits on these just because the initial target was already met on the gap down into Monday. So yeah, volume wasn't too crazy here either on the whole gap down and reversal intraday. So we have an inside bar in store here now for JPM. I might want to see how this one behaves underneath those EMAs now. And if we could get healthy looking compression that leads us to more downside, I'd be more than willing to take that. The volume patterns here have been really bearish. Like I said, I mean, this is how many inside bars that we had in a row. From here, I mean, technically these are all inside bars of 14 different trading sessions, 20 days total. So yeah, that's very notable there. If you take a look at the weekly, it is not the cleanest. However, we did not crack weekly structure from higher low by higher low, and then higher low. Whenever things accelerate for the downside potential, you crack structure, you get lower highs, and then you get then new lower lows. So I think this thing can sell more, to be honest. So yeah, those were the trades today, guys. Nothing too crazy. And yeah, if anybody has any questions, please let me know, and that will be it.